16th yearly high. Look, the odds are going to be shortening daily that we're going to set a new high, surely.
We got so close to it, 4,581 points today. So if we can break past that mark, there's not much technically up to that 5,000 point level. So watching that high point today very closely. Today was a good day, up by 0.4%, and it was quite interesting to see the sectors which outperformed. In 2012 so far, it's been a pretty good year, up by 12%, but it's really being led by those defensive high-yielding stocks. Today we saw a little bit of a mix, and if we have a look at the best performing sectors, we saw the utility space, but then we also saw the materials and the industrial space doing well. In fact, at the moment, high-yielding stocks are looking attractive, not only because cash rates here in Australia are going down, but also because it does look like we are seeing, I guess, more quantitative easing or rates going down in the rest of the world. And this week, we're watching Japan very closely. It looks like the elections on the weekend for Japan will see the LPD party getting into power. And of course, that probably means more in terms of the asset easing that we've seen in Japan. In terms of highs, we did see some of those higher yielding plays doing well today. 52 weeks high for APA. We also saw Air New Zealand and Navitas doing well. These are all stocks which yield more than the cash rate at the moment. We also saw the property space doing well. Lend-Lease as well as GPT reaching a 52-week high. We've seen some deals as well as merger and acquisition activity, which has helped this space. And Magellan Financial Group, nothing seems to be able to hold this fund manager down. The stock is up a massive 250% in 2012, so continuing to do well and continuing to hit highs. We did see the positive performance on the Australian market despite economic data, which was a bit softer. We saw business confidence at a reading of -9. That's compared to a reading of -1 in October. But all in all, a good day for the Australian share market. It was really nice to see some of those material stocks fighting back. Atlas Iron up by a massive 9.8% today.
Says it plans to dispose of plant waste in Malaysia if it is not recyclable. Julia, this is not a stock for the faint-hearted.
If we have a look at Lynas and this particular announcement, I guess this imposes an extra cost. And the thing with rare earths is that the reason why they're so valuable at the moment is because of China's export restrictions. Rare earths aren't actually that rare, which means once we do start to see more supply coming onto the market, and that's just a timing issue, then we will see prices fall. And we've seen that throughout 2012, where some rare earth prices, especially the ones Lynas looks at mining, have fallen by around about 80% in value. So Lynas's advantage has always been the first mover advantage, and of course as these problems arise, some of its competitors are going to be moving towards it in being able to provide supply to the market. So in terms of the supply situation, rare earths, they're not rare at all. China just had pretty much a monopoly on the rare earth market, but because of these export quotas, we're seeing a lot of other players in the market. Lynas, of course, we're seeing a lot of volatility, one because of the rare earth prices moving around. We've seen quite a bit of volatility in 2012, and number two, that Malaysian processing plant. So it does look like they're going to continue processing, but Lynas, it sounds like saying in that announcement that they are looking to export some of that waste material, so that will be an extra cost in terms of the operations of that processing plant over there.
The better news story out today, Julia. Lend-Lease, the preferred bidder for an entertainment and convention complex in Sydney.
This is good news for Lend-Lease. We know that the construction market in a lot of states has been under pressure, and yet Lend-Lease's pipeline is looking extremely attractive. It's got Barangaroo, and now this Lend-Lease-led consortium has won around about $2.5 billion worth of new work. Now, $1 billion relates to the Sydney Entertainment Convention, as well as that entertainment precinct in Darling Harbour, and then an extra $1.5 billion relates to a property which is adjacent to it, which is also up for development. So all up, the financing commitments should be in place by 2012, and we should see the work commencing by 2014. But good news for Lend-Lease shares. It's a difficult time for construction here in Australia, but Lend-Lease is looking pretty good.